afternoon to everybody, and it looks like we have a full house, which is wonderful. And I'd like to thank in advance our panelists for what I know is going to be a really interesting discussion. And as was just stated, today's session focuses on the future of money, a topic which in one way or another we know is covered multiple times in the media, and we probably read about 1 million different articles every day about it. Emerging innovation is certainly changing the way in which we examine what the term money really means. And it also raises questions regarding how money could evolve in an economy that is increasingly digitized. So it seems that the future of money is continuing to evolve, but it's kind of funny when you think about it. What exactly is that referring to? Does that mean going paperless? Does that mean going digital? And how is that different from what we have today? And that's why we're here today, to learn from these experts and learn from our panelists about all these different topics. We know that there's a wide range of players that are pursuing opportunities. For example, we have large financial institutions that are actively exploring the impacts of digital currency and blockchains, and there's certainly non-bank entities and institutions that are active as well. And then, of course, we have central banks that are undertaking a range of different fintech experiments and projects, including assessing the potential impact of digital currency. So certainly, these new and emerging forms of money present opportunities and also challenges. And then, importantly, you have to take into account the regulatory considerations as well. And this might likely necessitate a balance for regulators to make sure that the important policy objectives such as risk mitigation and resiliency continue to be upheld, while at the same time encouraging that innovation and growth. But I realize you guys didn't come here to hear me talk, so let's turn it over to our panelists and learn from them. All right, so I'd like to start off the panel. Let's first examine what you guys all think of the future of money, what it might look like, and what that means to you. And actually, Kjerstin, if you don't mind, I'd like to start with you and get your thoughts from DNB's perspective.
Absolutely, and thank you, first of all, for putting such a fascinating topic on the agenda. As you're saying, I mean, this is increasingly taking up space in newspapers and all other areas. Sometimes I kind of get the feeling that the debate on the future of money is very much focused on what technology is available and what can actually the technology enable us to do. And I think it's useful to go back to the source of which should be the source of every innovation, and actually ask ourselves what is the real problems that we are trying to fix.
Sure.
And these have a multitude of varieties. I mean, it's about the cumbersomeness, the inefficiency, and the cost of dealing with cash in our everyday lives while buying something at the market, whether it's online. It's about global cross-country transfers, which is definitely, in addition to being inefficient and costly, very complex. And thirdly, another point is in the areas that lack the financial infrastructure, how can they get accessibility to a currency which is stable, and I think the solutions and what we were looking for will vary depending on what the problem is. And sometimes it is about the future of money as we know it, and sometimes it's about increasing the efficiency in the payments value chain. That can also be a solution. And just to share a few experiences from Norway and the Nordic region, which is very much gone cashless. And we took the initiative 4 or 5 years ago to build a wallet that very quickly grew traction, where we invited the other banks in the market to co-own it together with us. And within the space of 12 to 18 months, we have more than 70% of the Norwegians actually using that for peer-to-peer payments. This wasn't the big transfers, but sending money to friends, sharing the bill when you're going on a trip, and that kind of thing. Quickly also we were part of top 10 in App Store. I mean, it doesn't happen often for a country with 5 million people, but it got a lot of traction, and the result of it is that less than 5% of transactions in Norway is actually settled by cash. And I guess the key learning I would like to share is also that when the innovation is good enough, it has to be simpler, it has to be accessible, then the behavior will change very quickly. So I think what we're looking for in money too, solution can be different depending on what the problem is. For the Nordics, it's really solving the lack of cash. How do we have a backup plan if connectivity is gone? How do we then have a digital alternative, since cash is not there any longer? You don't have to go far, but if you go to German-speaking Europe or Japan, what you need to solve is more an over-reliance of cash and so forth. So the solutions will actually depend on what the problem is. There is a lot of innovation going on in terms of cryptocurrencies, but I must admit that they are still relatively niche-oriented. It's a huge variety. But some of them, at least from my perspective, they more look like means of storing value rather than what we most often think about as a means of payment. And as you also touched upon, once you start looking into what can be currencies of global scale, if anything, that raises a lot of questions and issues where I really don't think we're close to having the answers. And you're very quickly into debates on financial stability, sovereignty, and the role of regulators and central banks. So not really giving an answer. I think it's hard to be very certain, but a higher diversity when it comes to what the future will bring, and definitely the current larger players' ability, I think, to address and spur innovation to solve the real problems. I think those will be key elements into deciding what will be the future of money.
Certainly interesting. Thank you for that. And Charlotte, I'd like to turn to you and ask you a similar question. The future of money, what does that mean to you?
So I'd very much like to build on a lot of what Kjerstin has said, which is we spend a lot of time, or you see a lot of debate about the form factor or the technology. But it's probably pretty easy to say it's going to be both digital and mobile. And if you can move on from that point to then agree that the future of money and payments becomes quite embedded, and therefore you have to be thinking about not just the future of money, but what is it that consumers need and want when they pay? Because in the end, that's what it's for. And I think the needs are clear, but they're not. We don't always spend enough time on what consumers really need. They do need security. That's why money was invented in the first place. But what security means in a digital age is a lot more around resilience and an understanding of what happens when things go wrong. If your fridge, your teenage daughter is gaily ordering milk, or goodness knows what my daughter is doing, you want to know what happens when those things go wrong. Equally, you need to know that it's going to work. If you've bought your cup of coffee, you don't want to be waiting hours to be able to pay for it. Or in our case, look at Europe right now. We've obviously had a very sad failure of a travel agency. Hundreds of thousands of people are recognizing that how they paid mattered. And those who paid on a card scheme or other and in some other forms were insured. Others are finding they're not. So that aspect around protection is going to be big, and that'll vary depending on what they're trying to do. I do think we also need to remember the very important human need for control, to feel in control of your financial life and enable the money and payment systems to provide ways of controlling their lives, particularly in a world where we have greater dependency, particularly at the sort of more vulnerable end of the age spectrum. And then the role of inclusion. In a digital and mobile world, how do we make sure people come with us? So I think we need to think of the traditional sort of tests for money. Is it stable? Is it a source of exchange, unit of account? And then build on these extra requirements that are surrounded around payments. And that's where I think policymakers can add so much value. I mean, their approach has always been to focus on standards and consistency and transparency. And that's where I think both organizations like central banks and even organizations like ours really come together, because open systems with clear standards allow for choice and innovation. And that's where I'd love the debate to move more towards, rather than the endless debate about one cool piece of kit versus another cool piece of kit.
Yep, absolutely. And Chris Brummer, we have two Chris's on our panel today, so bear with me, gentlemen. Chris Brummer, I'd like to ask your thoughts as well. And for example, does money need new functionality? In your opinion, does it need to be programmable?
You know, I was having a very interesting conversation a couple of weeks ago with someone that many of you know, Peter Kjerstin from the European Commission, on a very similar question on sort of what is money? Because it's not only an academic conversation, but it's also a regulatory conversation. And from a business side, you're trying to figure out, well, can we recreate money to both reflect consumer demands as well as perhaps create new kinds of markets? And I think that, well, one of the things that Peter mentioned was that what money is has never been a linear journey. And when we talk about money, we're talking about money in a particular historical and institutional context. And I think that's particularly important because the question of programmability is actually a question that you get to after you get to this first order question, which is we have now the ability to digitize money, okay? And what does digitalization mean? And I would suggest that digitalization impacts what and how we think about money in two ways. Number one, it certainly pushes the boundaries on redefining how we think of the existing current use cases for money. So when you think of, again, this question of storage of value, instrument of payment, a unit of account. And from that perspective, you think about things like tokenization, the ability over the internet to move value instantaneously without the kinds of legacy intermediaries that you've had before. And this is sort of redefining and pushing the boundaries and creating an entire paradigm of how we think about payments, right? But the other important aspect that you're sort of pointing to is programmability. And that when you can digitize money, it allows you to program it. Now, what programming money does is that it at least presents the possibility of expanding the scope of use cases for money. I mean, it's not just transforming existing use cases, but introduces more kinds of use cases. And that's something that also regulators are trying to grapple with. And that is when you can not only tokenize something, but you can build some kind of payment infrastructure off of it, it creates the possibility of thinking about money as a service. It creates the possibility of thinking about money as a contract that goes far beyond our traditional concept of a bearer instrument, right? A traditional bearer instrument. It creates the possibility of money as a social network and as an ecosystem and even a marketplace in and of itself, right? Now, by creating all these sort of additional use cases that don't fit within the traditional economist sort of canonical definition of money, it's only when you get to that point that you can start to ask yourself, like, should something happen or not? And I think a lot of it's going to come from the demand side, from consumers, and it's also going to be from the folks here in this room, and trying to think through, well, when we can create this new product and it can at least vie for the claim of money. It may not necessarily have all the 3 traditional use cases, but it may present 4 or 5 new ones. Well, how do we then communicate that effectively and safely to both regulators and I think to market participants and to consumers?
Yeah, and I think those are certainly interesting points. Thank you. I would turn now and look at it through a central bank lens. And so, Tim, I would ask you, could you provide your insight into perhaps how central banks are planning for or thinking about this new generation of money?
Yes, well, I mean, certainly this is something we've been thinking about quite a lot. I mean, it is pretty central to what we do. And it's really, I think, just a reflection of how technology is changing the way that money functions in the economy, and I think all the other panelists have highlighted that. And really, I mean, we tend to focus on two broad forces. One of them is this diminishing use of cash in transactions, and that obviously up to a point just means that people are making different choices. But I think the experience is that actually you may reach a tipping point where the behavior of the merchants, the consumers, and the banks kind of reinforce each other in a way that leads to a disappearance of notes, of banknotes from circulation, and where even people who'd like to be able to pay in cash don't any longer have that option. And the sort of situation, in the words of the immortal Joni Mitchell, you don't know what you've got till it's gone. And so central banks, I think, in quite a few places are thinking about well, what would be the implications of that world? And if households no longer had the ability to use cash, what would they lose from that? I mean, they'd lose the sort of the backing of the central bank in providing the safety of the instrument they're using. They'd lose perhaps the element of privacy that they get from the use of banknotes. They would lose possibly some of the convenience, the resilience if there's a power failure or something like that. And so we're trying to think about, I guess really on two tracks, and one of them is I think many central banks are thinking about the economics of banknotes more seriously, and how do you delay that tipping point if you think that banknotes are still useful. But then the other side of it is, well, should we be looking at digital alternatives that actually graduates the same functions of banknotes to a world where they can be used at point of sale, or where they can be used in a for peer-to-peer transactions online. And that's of course one of the big drivers, particularly of course in the Nordic countries, where in Norway and Sweden, where this has advanced to a much greater degree than it has in countries like Canada. But of course there's another set of factors which are really related to the cryptocurrency world, and the fact that we're observing various products. We think the generation of cryptocurrencies like Bitcoin and so on are probably not going to become the mainstream means of payment in the economy. That we think that they're pretty deeply flawed in their design in a way that means that they'll never be effective as a means of payment, store of value, unit of account. But stable coins are a bit of a different story, and there you actually do have some stability of value potentially, and the potential that this could actually be more seriously used. And we were, this is something we've been thinking about for a while, and we've been, I think, trying to point out to people that the technology could evolve rapidly, and you have thousands of brilliant people trying to think of new ways of creating money, and we could be one innovation away from something that could be seriously useful and therefore seriously disruptive. But then, of course, after June, with the launch of plans for Libra, we no longer had to make that argument. It was clearly being embraced really pretty strongly by people in quite a lot of places. So really, this points to a world where you could have monies being created by quite a few different players, and in fact, you could even have a multiplicity of electronic monies, and that kind of resonates with where central banks started to take a monopoly of banknotes, which is we had a multiplicity of bank monies, and they weren't, the public had trouble ascertaining which was reliable, which was not, and in that case, there was a case for a public monopoly to establish the trust and credibility of a public institution behind it. Now, this is work that the Bank of Canada has been exploring for the last 5 years or so. We're in the process of trying to identify the circumstances under which we might recommend going ahead with issuing a digital currency. But clearly, it wouldn't just be our decision. It's something that would require the government to be behind it. There are a lot of other aspects to this that go beyond the mandate of the central bank. For example, I mentioned that privacy is one reason people like banknotes, and if we think we want to create something like a banknote, we want some privacy attached to that. But we also know that privacy that's generated by banknotes is used for a lot of illicit purposes, for money laundering, tax evasion, terrorist financing, and so on. And clearly, we would I think no central bank would be allowed to, let alone want to create a medium that was going to be used for all those purposes, and to an unlimited degree. And so you have to figure out, well, where do you put the safeguards to ensure that the kinds of checks and balances against illicit use that already exist with cash and with bank transactions. And so that's one aspect that we've and others have been thinking about. But anyway, very complicated, very exciting though, and certainly touches on a whole lot of aspects of the economy and the financial system, and we look forward to continuing it.
Yeah, no, absolutely. Thank you for that. I would now turn to Chris Giancarlo. I know you recently published thoughts, I think it was actually earlier this week, regarding an idea for a blockchain-based dollar. So I'm wondering if you could share with us perhaps what this solution might solve for, and of course, your thoughts about future money in general.
I'd be happy to describe what we proposed in the journal. Before I do, let me just sort of set the scene for how we came to that. And I was fascinated by what the professor was talking about, laying out what is money. And whatever money is, it still makes the world go round, very much so. And money competes every day. In fact, as you were saying, Tim, I mean, central banks in some ways were created to bring some standardization to a world in which different species were used. And you go out throughout history, I think in Pompeii, they've discovered over 24 different species of currency that were used in ancient Rome, and certainly in the discovery of the New World in the 16th, 17th, 18th centuries, all types of different coins were used. And what made one coin more valuable than another was a range of factors. Certainly, stability and a store of value was critical, but so was convenience. And there was something called the piece of 8, where you could break off different pieces of it. And it was actually a technological breakthrough and made that currency more valuable than others because of its convenience factor. And I think we're in a world today, as we go through this digitization of assets, this sort of third round of the digitization transformation, convenience of currency, the electronification of currency is part of what's driving this transformation. So as someone who spent 5 years at the CFTC, we spent a lot of time thinking about Bitcoin and the development of Bitcoin futures and following this. In the last few months of my term, I started spending a lot of time thinking about central bank digital currency. Now, not being a central banker, but being a market regulator, I thought about what would be, in a sense, the most direct method to get there. And it struck me, and this is something I think you said, Charlotte, it's not about reinventing everything. It's actually utilizing existing trusted providers like yours and others, but giving them a standard set of technological protocols to use. So in short, our proposal, I think, is a quite simple one. And that is that there be an independent enterprise. Now, it can be a quasi-governmental. There's certainly a role for strict standards and government role in this. But having been in the government, knowing how difficult it is to actually do technological innovation in government, being a representative of government that couldn't build a medical website, and after 3 tries eventually went to the private sector to get it done. This has really got to be built, if it's going to be built on time and built, it's got to be built with private sector involvement. But that entity would make those standard protocols available to the entire existing financial ecosystem, to banks, payment providers, and others, standard set of protocols. And it would not be in the business of collecting data. It would be in the business of developing technology only. The relationships that people would have with their providers would be their existing relationships today, but who knows what new entrants to come. And it would work through the existing regulated system, so bank-regulated enterprises, other regulated enterprises. So a very simple, really a very simple concept to create a digital version of the dollar. And why does this matter? I believe it matters because I believe the reserve currency, the primary reserve currency status of the dollar is very important to the American people, but I think it's important to people the world around. And the battle is being fought today in East Africa and West Africa and Southeast Asia for that convenience factor, for that utilization of the dollar as a reserve currency. And I think it matters that we develop a digital dollar so that the dollar continues that reserve currency for decades to come. So looking forward, and I look forward to input into our proposal. We're going to have more to say about it with weeks to come. I was joined in developing it with the CFTC's Chief Innovation Officer, Dan Gorfine, and we look forward to developing this, look forward to engaging in the dialogue with folks.
Great, well, thank you. And now that we've set the stage a little bit, I'd like to turn now to some design considerations. We know that digital currencies are certainly top of mind these days, but before we go into that, I think it's interesting to take a step back and look at the underlying blockchain and distributed ledger technologies. So actually, I would pose this question to Charlotte. Would love your perspective on what the potential would be for blockchain and DLT to impact, payments market infrastructure, financial infrastructure, excuse me.
So let me, if you answer this in two ways, if I might. I mean, we do have a live in-market blockchain technology for larger transactions, larger corporate transactions. But I think the bigger question that a number of people in the panel have raised is this question of what does resilience mean in a digital world? It's worth remembering that forgery of banknotes was a capital offense until quite recently. And resilience, in a way, is the new version of that in the digital space. And it means different things. So for retail transactions, resilience means day in, day out, every second, being up and ready to allow people to pay for coffee before the coffee gets cold. Bigger transactions, it may not be that absolute millisecond that's vital. It might be that it's the recording of the information that blockchain allows you to do. So I think we have to use the technology to have a proper debate about resilience and what that means.
Absolutely.
Because in a sense, that's the new frontier in the digital world. So for someone like us, being up in the millisecond, doing tens of thousands of transactions over the Christmas period as it comes up, delivering this sort of 6 nines infrastructure is vital for the kinds of transactions that we serve. But there will be others for where tokenization or the slithering of transactions becomes really important for a different use case. So I think blockchain opens up a debate about what does resilience and data integrity mean in the future. And you've got to pursue that debate as much as you have, again, the technology itself.
Absolutely. Thank you for that. I think it'd be great if we could turn to maybe some specifics. And I think it's important to consider design features of these digital assets as folks were alluding to earlier. And Kjerstin, I would ask you if you could highlight some design considerations and how these might impact the role of various players in the space.
Because it will impact the roles of players in many ways, but what you are addressing is in fact extremely important when it comes to in what ways will it impact the roles of existing players. And then just taking the follow-up from Charlotte on distributed ledgers, one design feature is obviously if it's a public or private ledger, not a private company or a public company behind it, but whether it is transparent and public what transaction is being done, which is the case for most of the cryptocurrencies out there. They are public and open, not that the identity is open because that is protected, but still there is an opportunity for authorities, for instance, if it's related to criminal activity, that they can actually go in and look beyond what is protected in terms of identity. Talking about the private ledgers who are stored in private databases, it raises a whole other degree of concerns because there is hardly any way to really go back and see who is behind it, and that's without starting to talk about the challenges related then to anti-money laundering, fraud, or other answers that I think still have to be, or other questions that still have to be answered. We talked about tokens, whether it's actual money sitting in an account or tokens, and in many ways, if tokenized and extracted from an account, that is something very similar to cash as we know it today, other than the fact that it would be digital and maybe sitting digitally in one online store or another. And for wallets, most of them, they would be online, but you can also have versions who are offline. Of course, we are a commercial bank. If you are talking about a token that is very similar to cash, that wouldn't necessarily change the roles around substantially. Another element is, of course, related to central banks who have different discussions on different scenarios. And the Norwegian central bank has ruled out being a direct receiver of of deposits, whereas some other banks are still debating whether that is one solution. And obviously, that would tremendously impact the roles of commercial banks. And I have yet to understand how the thinking is around how actually putting that capital back into work, as is the big role of commercial banks. But I think policymakers and regulators have an extremely important role going forward, not to and I like what you're saying, to spur the innovation, and also what Charlotte is saying about creating the standards and making a level playing field, because I think that's really the hard part with so many new players coming into the financial industry space. It's hard to grasp when non-regulated entities are entering a very regulated space. How do you set free the innovative power without without making an uneven playing field? I think that's probably one of the hardest jobs that you're going to have to work on going forward, and that is obviously extremely important for us as an existing player in the market.
Sure, absolutely. And I'd actually like to turn now to take an audience question that's come in around the theme of custody. And this is actually really especially interesting, as I'm sure that many of you saw the news article that Fidelity is ramping up its cryptocurrency custody business. So actually, Chris Brummer, I'd love to ask for your thoughts on this, the design considerations regarding custody.
So this is a fascinating area, and I just wanted to pick off from something that Kjerstin had said about certain kinds of trade-offs. And I would like to introduce two kinds of trade-offs. I'm a law professor. I know I'm talking to many economists. I see a couple of folks from the colleagues from the IMF. Economists tend to think about things in terms of trilemmas. In other words, you have three options, and in the best case scenario, you can only get two of the three options. And I'd like to present two of them. First, when it comes to this initial question of regulating innovation, a colleague of mine, Yeshi Yadav, and I, we wrote a paper talking about the regulatory trilemma, which is you can get market integrity, traditionally, market integrity, you can get financial innovation and clear rules, but never all three at the same time. And we go through the entire cycle of history, and you end up to sort of where we are now, which is a mixture of lots of rules. There's some financial innovation and market integrity, but the rules aren't necessarily clear. The second trilemma that I think is particularly appropriate, because we were talking about the infrastructure question for custody. This was something that we were over at the CFTC 2 weeks ago, or over at the Technical Advisory Committee, and Tom Chippis, the CEO of ErisX, we were sort of sitting around listening to folks. And before giving that, our presentation, we looked at the fact that custody solutions for digital assets inherently have a set of trade-offs, whether or not you're going with a cold wallet solution or an online hot wallet. And we're toying around right now with our own kind of new trilemma for custody, which is you can get scalability, you can get security, and you can get cost, but you're definitely not going to get all three of those at the same time. And one of the reasons because of this, beyond the cybersecurity question, is that the cold wallet solutions, by their very nature, require much more human interaction. You can't scale that in the same way you can when you're trying to build a wallet on some kind of highly digital platform, right? So you have to make certain kinds of questions and make certain kinds of design choices based off of the potential liquidity needs, redemption requests. At the same time, how do you protect and safeguard those assets? And then, one of the other design solutions is where do you want to even keep the wallet? Are you doing it with a kind of exchange solution where you're collapsing your market making and your exchange functions, which create certain kinds of risks in terms of conflicts of interest, but at the same time, are there ways that you can technically divide those kinds of operations in a way so as to sort of navigate that trilemma in a way where the trade-offs aren't quite as extreme? And I think that that's where people are at. One of the key regulatory questions is going to be, how do you make sure that people understand the set of choices that any particular market participant is making so that they can make a decision that's good for them?
Yeah, no, that's certainly important. Tim, I'd like to direct this towards you. Earlier, you had talked about central banks, how they're approaching this evolving landscape, and I thought perhaps if you could share with us a bit about emerging innovations in payments modernization.
And you're probably referring to the G7 report that was issue. Oh, payments modernization, yes. So, I mean, that's certainly a topic on which which we're heavily involved in Canada, and I think a number of other central banks are also trying to establish payments rails that work more, faster, more efficiently, that allow for more data-rich payments, and also that open up access to more payment service providers, so that's. I mean, there's a sense that the existing payments rails often are dominated by a relatively small number of players, and that it would be better for the range of options available to the public if new fintech companies were given access to the payments rails, which of course would also mean that we'd have to find the appropriate basis on which they could safely be given access to accounts at the Bank of Canada. So that's a set of questions that we're looking at pretty actively. There's another set of questions we're looking at more for the future, which is could we bring blockchain into some of the kinds of payment systems that we operate on a wholesale basis? For example, the large value transfer funds, and so we have we've had a series of research projects which have been kind of controlled experiments basically, but experiments that work, basically, and show that yes, indeed, you can use blockchain to do large value transfers. You can use it to do that combined with delivery versus settlement over for securities transactions, and yes, you can also use it for cross-border transactions. But of course, a number of these things then I think raise a lot of other issues which have to do with, well, first of all, what would actually be the benefit of doing it? And then the second one is are there other constraints that prevent it being done efficiently? And particularly in the case of cross-border transactions, there are notoriously many barriers to transferring funds that make that whole aspect of payments both expensive, inefficient, and unreliable. And those don't only relate to technology. Technology and the lack of interoperability is part of the problem, but it's not the whole problem. And so that's something that I think we have to think about in the future.
And just a follow-up for you, Tim, since you mentioned it, the G7 working group did just issue a report on investigating the impact of global stablecoins. Is there any thoughts you'd be able to share with us?
Yes, and that does flow a bit from that, because certainly that is one of the aspects that the Libra project in particular was targeting, was trying to find a way of using technology to make cross-border payments seamless, and also to enable the people who are unbanked to have access to the financial system. Those are clearly genuine problems, and they're problems to which we don't yet have a solution through other means. At the same time, as the G7 report, which we participated in, highlighted, there are many issues that particular solution raises, and those would be issues with a number of other potential stablecoin solutions, and those relate to legal clarity, to safeguards against money laundering, to competition, to investor protection, and a number of different things that they raised. And then even beyond that, if these means of payment were to become widely used and global, then they would also raise issues having to do with the sovereignty of countries to establish their own currencies, and so those are issues that of course need to be addressed. But at the same time, and which of course there's work that's going to continue through the Financial Stability Board and other channels to come up with a more complete set of responses to that. But then at the same time, I have to say that Facebook at the same time has identified a real problem, and if we don't like their solution, then it begs the question, well, like, where's ours? Where's ours in the official sector? What are we going to do to make the payments more efficient? And so this really, I think, is a rallying cry for the official sector to come up with better ways of making cross-border payments more available to the whole world's population.
Yeah, no,
My
absolutely.
point exactly.
There we go. Great. Well, we are out of time. Look at that. That was perfectly on the clock. I'd like to thank each of you for joining us today, and of course for our audience as well. Thank you all.